The European economy is slipping behind the United States. In dollar terms, GDP per capita has significantly diverged. Whilst the Eurozone is stagnating, the US economy is soaring. Now, the difference in GDP per capita is not everything. Europeans have longer holidays and shorter working hours. Adjusted for time spent working, German living standards are still on a par with the United States. But there's no statistic that can alter the fact that the US economy is growing much faster than the Eurozone. And the gap in economic performance could get worse as three major shocks continue to hit the Eurozone. Can the European economy, hit by high gas prices and an ageing population, cope with the cheap subsidised exports from the United States and China? A key barometer of a European economy is in car manufacturing. BMW, Fiat, Renault are companies that dominated the post-war period. But there's a growing danger that they are unexpectedly losing out to Chinese and American firms. The first threat to the European economy is coming from its old ally, the United States. The Inflation Reduction Act of 2022 involved generous government subsidies for green technology, such as battery and electric car production. Now, this successful US industrial policy is one reason for the surge in US manufacturing investment and the higher rates of economic growth we're seeing in America. However, Europe is struggling to emulate this policy for a few reasons. But first, I'd like to mention this video's sponsor, NordVPN. Now, did you know that I'm a keen cyclist, and in 2013 I won the National Hill Climb Champion? Now, why do I mention this? Well, last Sunday was the Tour of Flanders, one of the best days cycle racing in the calendar. But I was with my parents up in Yorkshire and they don't subscribe to Eurosport. Disaster. But with NordVPN, I was able to get live coverage and watch a great day's cycling. So this is a good thing about NordVPN. It can enable you to view websites blocked by IP geographical location. Grab your exclusive NordVPN deal by going to get a huge discount off your NordVPN plan plus 4 months extra free. And it's completely risk-free with Nord's 30-day money-back guarantee. Now, a good question is, why can't Europe just be like the United States and implement its own green industrial policy? Well, firstly, it's very expensive. As a result of this policy, US debt is forecast to rise sharply. Some say it could reach 150% of GDP in a couple of decades. But the US definitely finds it easier to borrow than many other countries because the dollar and US government bonds have a global appeal, something the euro is yet to emulate. Europe also suffers from a much more conservative attitude towards fiscal policy. Germany really stands out for having low debt, but an unwillingness to invest in public sector investment the economy badly needs. And this is definitely a factor behind low growth in Germany in recent years. So Europe has a reluctance to replicate the scale and boldness of US industrial policy. They can't afford it, or at least Europe feels they can't afford it. Now, to be fair to Europe, the US-led manufacturing subsidy bonanza has made it very expensive for any country to attract greener investment. For example, the UK recently paid nearly £500 million just to attract one battery factory. This is really an unsatisfactory situation, as big multinationals take advantage of governments around the world desperate to attract inward investment, especially in growing technologies. Offering large subsidies is an example of unfair competition and beggar thy neighbour trade policy. The truth is, though, that Europe have been out-subsidised, and if Trump were to be elected, then next year Europe would likely to also face much higher tariffs on top of all the subsidised imports. But perhaps a bigger threat to the European economy comes from China. To cut a long story short, the Chinese economy relied quite a lot on the property market, but a collapse in the property market has caused the Chinese Communist Party to seek an alternative way to maintain economic growth and the implicit Chinese political contract, no democracy but high economic growth. So their policy is to prop up the economy with large state subsidies for manufacturing and export sector. What this means is that there will be a flood of cheap imports coming into Europe, undercutting already struggling European manufacturers. The problem is that the world has a global imbalance. China has a current account surplus from all its exports, and therefore very high levels of savings. Now, a much better policy for China would be to encourage the use of these savings on domestic consumption, help Chinese middle class, and this would lead to more demand for European goods. But for its own reasons, the Chinese Communist Party wants to promote even more manufacturing and exports, which will lead to an even bigger trade surplus and more excess savings. The problem is, whether it's a bad policy or not, it's really awkward for European economy. Now, European car producers really excelled in the internal combustion engine. German mechanical engineering was the best in the world. But recent policies have encouraged the big European car firms to shift dramatically away from what they're best at to producing electric cars. But there are two problems with this approach. Firstly, in electric technology, they don't have the same comparative advantage that they used to have. Chinese and American electric cars firms can produce potentially much better cars at a lower cost. And secondly, there are fears that consumer demand for electric cars are lagging behind the optimistic forecasts of government and industry. A lack of recharging points and infrastructure and high prices are leaving many consumers reluctant to take the plunge into electric. Thus, firms face the prospect of a real glut of electric cars that they will struggle to sell. But with already low profit margins, there's a limited appetite for any price cuts, especially with cheap Chinese cars coming onto the market soon. Now, there are free market economists who would argue that free trade is always a good thing, no matter what your competitors do. So, for example, Chinese subsidies to make goods cheap will help reduce European inflation and improve living standards of consumers who face cheaper goods. And this will help especially in the short run. The manufacturing boom in America and the strong growth there should in theory help European companies with the opportunity to supply parts and components. However, there are good economic reasons to be sceptical about this approach of laissez-faire. Firstly, cheap Chinese goods can be seen in a different light of trying to dominate markets, to disrupt industries, force European firms out of business, and in the very long run gain market share and monopoly power and economies of scale which will make it very hard for Europe to ever come back. In the long term, the effect of very cheap Chinese imports may be a hollowing out of European manufacturing, giving Chinese and American firms the opportunity in the very long term to then increase prices. And also, since the Ukraine war of 2022, there's been an awareness that relying on trade from countries which could restrict sales for political reasons is problematic. But also there's another factor which makes free trade problematic. Chinese imports may give the general population a marginal benefit of lower prices, but the cost to domestic industry tends to be highly concentrated in particular areas. So the cost is felt more acutely by a smaller group of people, but those who experience unemployment and struggle to adjust to a fast-moving economy, leading to regions of real poverty and decline in former manufacturing heartlands. And this is a big problem from a social perspective. So these two challenges from Europe and the US are not easy to deal with, and will require a willingness to break with tradition and protect domestic manufacturing firms from unfair competition. The problem, though, is that if Europe responds with its own protectionism, it could set off further rounds of trade wars and with a long-run loss for the global economy. Now, I should add that the problems facing the European economy are much more than just external shocks. There are concerns about levels of bureaucracy, planning and regulations, which could deter investment. The EU is good at bureaucratic cookie notices which annoy users like me, but they're not so good at cultivating large tech multinationals, which is what's needed in the new era of artificial intelligence. But there is at least one piece of good news for the suffering European economy. The main cause of the recent downturn was the shocking rise in the price of gas and electricity, It really hobbled the European and German economy in particular, so reliant on electricity for industry, and it led to an unprecedented decline in living standards. However, gas prices have come down quite substantially since that mid-2022 peak. This will ease inflationary pressures, enable cuts in interest rates, and enable renewed growth in real wages, which will help boost consumer confidence. Losing the majority of Russian gas was a big disruption, but also its effective replacement shouldn't be underestimated. It's a sign that Europe can be dynamic when pushed into a corner, and it's too early to write off the European and German economy just because of the difficult past few years. Although they have many problems, there's also the scope for regeneration. However, energy still is an issue, with the price of electricity in Germany quite high, at least on a day-by-day basis, due to a lack of nuclear power. Now, some in Britain like to point to the struggles of the European economy as proof that we were right to leave the European Union, better off without the struggling European economy. But I think, if anything, these major problems Europe are facing are easier to deal with within a large trading bloc like the European single market, because if small individual countries would struggle to develop a realistic trade policy with the big trading blocs of China and America. The European Union enables at least the European economy to have a certain clout in both political and economic terms. And if we go back to the energy crisis and the cost of electricity in Germany, we have to see this in a context because it's considerably lessened by the European single market in energy, which enables Germany to import energy when it's more expensive to produce in Germany. Now, one of the reasons for the long-term concerns about the European economy is an ageing population. And this is definitely a global issue, but Europe and Germany in particular face a strong demographic crunch, which will lead to lower tax revenues, higher government spending, and lower economic growth. This video goes into more detail on how an ageing population will affect the European economy in particular.